So hi everyone, welcome to Investing Gurukul. We'll continue from the previous video where we spoke about gold. So in this video, we'll talk about silver. So silver has also been rallying exactly like gold, and it is still looking like there is a lot of steam left when compared to gold. So let's look at it in detail from Arun.
Hello, hi everyone. So, gold, as you know, has been rallying for last year or so. So, if you see the gold charts, you would have seen that it has basically doubled, right? So, from base of 2022, 2023 onwards, from $2,000 to today, it has crossed $4,000. In the same way, silver move started a bit late, but this is typical for silver. So, if you see in the history, the gold and silver, when it rallies, gold usually is the first one that starts because that's the monetary one. That's the one that starts. So then, then the next one to follow is usually the silver. After silver, you will see platinum, and then once all these three precious metals starts, then you have the base metals like copper and other things. So in a typical commodity bull market, you will see in a typical market, you will see this like one by one, there will be a progression. So if I just go back to one of these slides, so if you see, as you know, so gold and silver are monetary metals from Roman ages, right? So basically what that means is if I have gold, if I have silver, I can exchange it for some kind of commodity or something. So like if I want to buy something in the olden days, I pay with my silvers or I pay with my gold. So it's like if I have 12 silver coins, then it's equivalent to one gold in Roman. And then medieval Europe, similar. So you can see that the ratio kind of increased more and more. Like we have to pay more with silver for a single gold over the period of time. Now, but it's a cycle, right? So uh, it's like this. So if I have to pay more silver out of my pocket for a single gold, so then that means the gold is more valued in relative to silver, right? In the same manner, if I use more silver coins to, if I put more copper coins, say if 100 copper coins, if I pay for, then it might be just one silver. So each commodity, it might be that it's kind of equivalently, it's kind of viewed against the other, right? So people, they will say trade sugar for silk, silk for something else, and so on. So the ratio is very important, and ratio gives us an idea of what is the extent of the differentiation and how much catch up needs to happen. So, so we look at to understand whether, where are we in the silver cycle, we need to understand the gold to silver ratio. So gold to silver ratio is basically how many silver I need to buy a gold. That's exactly what it means. So in the trading view, if you put the gold slash silver, and then look at it from a monthly chart, so you will see this. So usually 100, when you are near the 100 in the last 30 years, whenever we are near the 100, that is like where the sentiment is very bearish silver. So people, are more bullish to gold. So if you see that the ratio is high, that means the gold is high while the silver is low, right? And then if the ratio is near 30, so that means that the silver is relatively higher than gold. So that is how you should interpret this. So so usually the 100 is near 100 is like where it is really extended and leaning towards gold. And then if it is near 30 or 40, then you would say that it is near silver, right? Now, if you see if you see in this graph, there is a blue line which is the 200 moving average. Now, every time the price chart, this ratio chart, it tries to move away from the moving average, and then it goes either direction, and it will try to come back to this moving average. Moving average is like the average, right? So when it comes back, so that means it could also go down on the other side, and then again it will come back. So this is the mean reversion that gets usually played out. So this way, the traders, the gold and silver traders, they used to make money from when looking at how the gold silver ratio is. They go either, okay, I'm going, uh, gold buy or silver buy relatively, right? Now, if you see what's happening here in silver, so you can see that, let's say, for example, silver, gold to silver ratio was around 30, around 2011. So what happened here? So if you go to the silver chart, you would see that 2011 was the time that we hit the peak, last peak, which is $50. So basically, what this says is when the silver was like $50, the gold to silver ratio was leaning extremely favorable to silver here. It was extremely stretched on the silver side. Okay. Now the price has again come back to 50. Where is the gold to silver ratio? It is actually near 80, which is more nearer to the median line, but still on the gold side. So this says to me that the silver move relative to gold has only started. Okay. So if you see, if it is 80, right? So what is, like, if you take 4,000, so today's the gold is at 4,000. What is 4,000 by 80, right? Which is essentially around $50, right? So that is exactly where silver is, right? So if I say that if the ratio is still near 80 and the median is say 70, so that means 4,000 divided by 70, which is like around 50 plus dollars or 55 or something. That is where silver is coming to the mean actually. So for me, silver has a long way to go because this move can even potentially it can go at least in this current temporary wave that we have, it can actually come down till this area here. It can come down. We cannot predict, so it can touch here and then go up, or it can touch here and then it can go here. So that could either mean either gold is getting a correction or silver is becoming going higher. It can be either way. So we need to understand that there is also that dynamic that even here without silver can still stay at 50, but gold can correct to 3,800, right? So, but whether silver is how much valuation that we can put, that we can look at it here. So here in this case it is extremely highly valued with relative to gold, and that's why this is more like an area where I would say don't buy silver anywhere. But in here, yeah, I would say you can buy, but just the usually the place to buy is where you have the peak bearishness. So whenever it goes near 100, that is when you have to go into silver or silver stocks. So if you talk about stocks, say Hindustan Zinc or any other silver-oriented stocks, you can go whenever you have these kind of ratios near there. And then whenever the ratios is near in these areas, that is when you try to get out of them, right? So I would say, long story short, silver has still more legs to run. The other thing I would like to say is this is on the short term. What I said is short to medium term. But what about the long term? For this is a very interesting chart, the quarterly chart. Quarterly chart means every single candle that you see here is actually 3 months candle. So right now, this candle that we have seen, the October candle, is starting from October 1. So October, November, December. December 31, this candle will end. Right? The previous candle was from July to September. Okay. So just look at this purple line. So the last time we had a monthly candle close, highest candle close was here in 2011 when actually it was $37. Okay, so actually the last quarters, the July to September quarter, when the candle closed, we had a candle closure breakout above this purple line in this place, right? So this is a extremely bullish sign because now you're talking about how many years? Around 1980 onwards to now, this is actually making this kind of breakout. When you have such a breakout, then you have a lot more legs left. We are talking about like almost parabolic moves that are possible. But again, remember, this is like is every candle is 3 months. So you could always have like a retest happen. So you could have a candle of next, maybe not this month, not this quarter, maybe next quarter, you might see a break, like a pullback till 37. So 49 to 37 is still like 30% down. So you could still have like a 30% down and then have a bigger up move. But the thing is, like, the silver has a long more leg to go. So that I can show you in a live chart. So I will just show you, go to this gold chart here. Now let me say, look at this one here. So if I go to a gold of a 3-month chart, you have this, right? Now in here, if I just do a fib extension, if I do a just a automatic fib extension, it will actually show me, the fib extension shows me that from the last like the move from here, it goes up till 2.618 fib level. We are at that place. Maybe this is where it to start to take some rest, right? Now, if you see, if you zoom in here, this 2000 here, where we broke out in October 2023, and then this candle, the next candle, this is where we are currently in silver. Now, we cannot predict the future. It can always go down. But I'm just saying, relative to gold, essentially we are here. So how do we know? If I go to silver, again do the same fib extension, so you can see that this is exactly where we are. Now, gold is extended like at this level, right? So 2.618 or 3 point. So you still could have another 2-3 months, or like another few quarters, where you could go all the way to 67 or even 80 plus dollars. So silver for me has a lot of legs left in it, but it doesn't mean it goes in a straight line. So the market doesn't go in a straight line. You might have some pullback here, even for like a 30% correction, but long term, silver looks good. So I would say like any associated silver stocks would also be, reasonably good to hold. Now,
We'll have a
let me go back. Yeah.
yeah, we'll have the disclaimer as well. This is for educational purpose.
Yeah. This is of course for education purpose, and this is just my view of how the charting is, and that is why I'm saying, like, it doesn't go in a straight line. It can always take a pause, it can even pull back. So it's not clear. We can only make an assessment of where we are, and then each one has to take their own risk profile in terms of how they wanna, invest, or how they wanna view this. Now, I will go to the next one, which is that gold to copper chart. So you can actually do similar things, like, gold to copper, gold to sugar, any kind of, because gold is a nominal, like it's a monetary thing. So you can use it against any of the commodities to understand how the pricing of that particular commodity is relative to gold, right? Now, this one is again interesting. If you see here, if you see here, now gold is higher and copper is lower, right? So that means it is far stretched from the median line. So that means copper has to do a lot of catching up to do here. So gold has gone up so high, it has gone, if you see here, every time it has moved very high from the median, it pulls back. Every time it moves from the median, it pulls back. So let's see the copper from, so this is 2020, right? So from 2020 to 2021 or 20 in this time, let's see how the copper has fared. We'll go to the real-time charts here. Oh, sorry. These are all my previous chartings that I've done. So let me do a simple monthly chart. Now, we were looking for 2020 to this move, right? So from COVID time to this one, what is the percentage move here on copper? So this is 136%. So the copper essentially went from nearly $2 to nearly $4 or $5. So this is what we are, we can see that the pullback effect has when it tries to do the mean reversion. So if I just take an example of Hindustan Copper, right? Let's take an example of Hindustan Copper. And then let's look at what has happened in the same duration of 2020 to 2021. So during the COVID time, it was like 18 rupees. Now in that like period of till 2021, it went to 170. This is the move that happens when you are the primarily this move happened because it's underlying commodity. Hindustan Copper mines copper, so it's underlying commodity. When it was $2, it was near a break even. But the moment it went to $4 and $5, they were making a lot of cash, which was going to the bottom line. So of course, the stock moved almost how many, like nearly 10x or 8x. So this is not me saying that whenever this copper move happens, this could have the same kind of return. But I'm saying this is how I look for a trade. Okay, now so I don't go and chase the silver or right now. The silver I would have positioned 3 months, 5 months back, right? Now I'm trying to position in copper. So that is because now I look for what is the next one. So this is the way that you'd have to look at the ratios. The ratios are very useful, especially when it comes to commodity based. Um, you know. So in the same way, quickly we will also look at oil, which is also very important. So because oil determines the economy. The more the oil, a lot of problems for the economy, right? So if you see the oil again it moves away from the median, if and then it kind of pulls back. So you can see that the 2020 was very abnormal because gold was much more higher than the oil because oil nearly went to, the futures went to zero, right? So it was the entire world was shut down. So that time, but then what happened? Once the problem was solved, then this it was so extended. So when it jumps back into the pool, it went all the way from 80 to the ratio went all the way from 80 to 20 in a span of like 1.5 years. Now, what happened for the oil then? So this is the oil futures. So 2020. Um, this forget about this. This was negative. It's because of the futures market went crazy. So I would say let's look at 18, right? So if you take $18, from $18 it went up to $124, right? So which is almost like 600 times, 600% or 6 times. So in the space of like this, this move, which was a very extreme, you won't find it. I mean, unless the world shut down again, you won't find such scenarios. But what it actually gives you is an idea of how the ratio works. So in this scenario, if you see currently where we are also currently very extended because oil is basically sitting in the same place, but gold is going high and high. So either gold has to correct or the oil has to correct. But the fundamental reasons of gold not correcting is there. I mean, like gold might correct, but not to the extent of giving up its gain for like last 1.5 years. So it's more probable that the oil at some point would start going higher, right? So this is the gold to oil chart have. So I hope this was very useful. Now, once again, I'm reiterating that this is not like do your own due diligence, do your own studies, and this is not a trade recommendation, but it's how I view the current commodities right now.
Yeah, thanks a lot, Arun. Hope this video is helpful. Subscribe to our channel for more videos. More videos on commodities coming up in our channel. Thanks, everyone.
Thank you.